Hello, my name is Chris Kapches. I'm the president of Chestnut Park Real Estate, and today I'm going to talk to you about the December market report for the Greater Toronto Area and to some extent the wrap up the year 2019. As anticipated, and if you've been following previous market reports that I presented, I've been indicating the market has been improving, and it was anticipated that December would produce some great results, and it did. Average sale prices were up. The number of sales that took place were up, both compared to last year. Average sale price about $837,000. It's a little higher in the city of Toronto, almost $890,000. We saw about 18% increase in sales year over year. So it ended in a brilliant fashion. Not records. We've had better Decembers than the December of 2019, but it was a continuation of a pattern that we've seen starting in March or April of 2019 and continuing right through the course of the year. So great news as far as sales are concerned, great news in terms of average sale prices, but we have some dark clouds on the horizon, and primarily due to the lack of supply. At the end of December, our supply was 35% less than what it was a year ago. We have only 7,400 properties available for the entire Greater Toronto Area. That is critical in terms of the number of properties that we have and the number of properties that we should have. We should be closer to 14,000, 15,000 available properties. So clearly we're going into 2020 with insufficient supply. Now, it may be that this supply will come forward. These high prices may cause homeowners to put their properties on the market. At this point in time, it's hard to tell because we're going to be caught to some extent in a catch-22 situation. If there's nothing for them to buy, then they might not get their properties on the market. So we're hoping, though, that supply will come forward, again, because we are starting to approach record high average sale prices. The highest average sale price we saw was back in April of 2017, which is $920,000. So we're still not quite there, but they're starting to make their way up. So looking forward, I would predict that we'll continue to see fairly strong sales, but not as strong as we would see if, in fact, we had more supply. I think we'll see some constraint on the rise of average sale prices, primarily because we've seen a little uptick in the cost of borrowing, around 3% now. We were under that for a few months. And on top of that, affordability. With average sale prices going up as they did in December by almost 12%, but wages only going up by about 3% annually, that's going to put some constraint on the ability of buyers to borrow and to pay higher prices. But on the whole, unless we have some economic catastrophe, and if we can get that supply in place, 2020 is going to be at least as good, if not better, than 2019. I think we'll probably be up maybe 5 to 8% in terms of sales, and I would suspect the average sale price will probably be up by about 3 to 5%. At least that's what the numbers are indicating at this point in time. So if you want a full report with some data, you can go to the Chestnut Park website, to our blog where I prepared that. And I look forward to providing reports through the course of 2020 and analyzing the market so that we all have a better handle on where the Greater Toronto marketplace is going in the coming year. Thank you.